Hi everybody, it's AJ speaking. Welcome back to my series about Rivian. This is part 6. By the way, it blows my mind that it took already 5 videos to just discuss the executive summary. I promise to do better throughout the rest of this presentation, otherwise this will take days to go through, because there are 30 more slides or 31 more slides. So let's start with looking at the total revenue line. You can see here the revenue development. In 2024, Rivian generated almost 5 billion in revenue. Forecast implies 5.6 billion, growing to 7.6 billion in 2026, and then in 2027, revenue kind of explodes to 12.6 billion. Just as a point of reference, Tesla generated in 2024 roughly 100 billion, or is 20 times larger in terms of revenue. So you see there's quite some variability from quarter to quarter. This just reflects, because this model is highly bottom-up, it doesn't use any big top-down assumption drivers. So the seasonality is reflected in all these numbers. For example, in 1Q, Rivian told us they only expect 8,000 vehicle deliveries. Of course, the forecast then reflects this guidance. But then also the rest of the year is based on a quarterly projection with a view to be in line with Rivian's full year 2025 guidance, while accounting for various Rivian factors like factory shutdowns, etc. So the forecast overall, and this goes for everything in this forecast, tries to be in detail as accurate or as close to a realistic real-life scenario as possible. So this slide 2, shows the same thing, total revenues, but this time broken down into the 4 key business segments of Rivian. And just to recap, this is the auto business, excluding credits, the credit sales, services, and other, and the VW JV. The two that are very different from the rest of it is obviously credits and VW JV, because these two segments have a very, very high gross margin relative to the other two main revenue drivers, that is auto and services. So auto is the lion's share. So for example, in 2024, in the fourth quarter of 1.7 billion in total revenue, 1.2 billion came from the auto business. A major 300 million outlier credit sale that was clearly a one-time one-off, because management guided for 2025 full year for just 300 million. So recognizing in one quarter 300 million is clearly not a base for quarterly extrapolation. And then services provide roughly 95 million, and the rest included VW related revenue. There was some revenue flow, even though this slightly conflicted with some CFO commentary. The reason is, she said that the service and other has a baseline of around 100 million, and the total revenue was about 214 million. So there was some other items. So the bottom line is, I think what happened is there were some other items that are not part of service and other, and are not really part of VW JV, so some one-offs, but they haven't disclosed what it was. But long story short, I had to bucket these revenue items, so I decided to go with the rough baseline estimate of the CFO. I show 95 to 100 million for some detailed factors I can't get into, and then the implied sort of the plug had to be the VW JV. But anyways, this is a minor detail. Then just on how this works real quick, I basically drive the auto revenue by looking at a volume forecast, applying trim weighted average prices, and this gives me the revenue line. And then for credits, I take basically management's guidance extrapolated. Service and other, I heavily lean on Tesla's service and other segment as kind of an analog for the development and some of the key insights we can take away, since this is very similar to Tesla's, just on a much smaller scale. And then the VW JV, we know that over a 4-year period, Rivian wants to release the deferred revenue, but we'll discuss it later. So this is also, you can, because of that guidance, you can quite well forecast how this will unwind in Rivian's P&L, which you see over here. So then when we dive into the main revenue line item, which is auto business excluding credits, you can see in 2024 the business generated about 4.2 billion. That basically stagnates in 2025. The reason is, as I said earlier, volume is not growing, actually probably slightly shrinking, and the mix change sets off some of the pricing effects. So therefore you have a very modest revenue growth. However, things change in 2026 with the launch of the R2 and some expectation of volume growth in other products. So you get to 5.8 billion, and this grows then kind of explosively to almost 10 billion in 2027, as the forecast assumes a highly successful ramp and launch of the R2 platforms, R2 vehicles. Just by the way, the forecast assumes that Rivian will be launching trims that are comparable to Tesla's Model Y. So Tesla has a rear-wheel drive version, long-range version in US, and a performance version. And the forecast assumes Rivian will do exactly the same, but obviously they will call it something else. And also the forecast assumes that Rivian will launch into the market positioned in terms of pricing slightly above Tesla across all these trims. So the next revenue item is, as we discussed earlier, credit revenue. I discussed this already in earlier parts of this series. There's a significant risk associated with this line item, that it could go away or be trimmed back. In terms of modeling, what I decided was I take management's guidance of 300 million, look at what this implies on a per vehicle unit basis, which is 5.9K. So Rivian receives about $5,900. This might look quite high relative to other automakers that receive credits, but keep in mind that Rivian vehicles, they sell in a let's call it bigger vehicle category, and therefore the emission certificates you earn are actually higher. At least this is my current understanding of the framework. So basically, what I did is I assumed a slight haircut to the value of these credits. So I put this down here. I assume a reduction to 4.7K in 2026 per vehicle delivered, and then a further reduction or a significant drop to 2.8K in 2027, and the significant drop here is driven by a significant change in vehicle sales composition, because keep in mind in 2027 the R2 completely takes over the volume contribution in Rivian, and that's why and I expect the R2 comes, and we know will come with a significantly smaller battery, and hence it's a smaller vehicle class, etc., and therefore will earn fewer emissions credits. So this is modeled on a volume weighted basis, and again reflect some haircut, because right now I think this is probably the most likely outcome under the current administration. Plus within the legal framework, because you have to keep in mind that large states like California, which is the by far biggest market for Rivian, they might have their own regulation, even if the current US administration kind of axes the emission system more broadly across the country. California, there's some meaningful likelihood they would come up with some compensatory measures. So to kind of bring this all into this forecast, I make these haircut assumptions to the credit revenue. So, but big picture, I view credits more as a risk item to Rivian than a upside item at present. So this brings us to the end of part 6. I hope this was also informative, and hope to see you in the next part 7. Thank you for listening. Bye bye.